to make warm our body this morning and to start the second session with full energy. Okay, this event hosted by the Ministry of National Development Planning of Indonesia. And we are truly honored to have such an esteemed audience here today. And once again, we welcome to you all to this paradise island of Bali. My name is Putu Desi, and I'm honored to be your host for today's event. And before we begin, please allow me to extend our warmest welcome to our guests of honor, distinguished speakers, and also moderator, and all of our distinguished delegates and participants of the high-level forum on multi-stakeholder partnerships 2024. Excellencies, distinguished guests, ladies and gentlemen, Ministry of National Development Planning is hosting high-level forum on multi-stakeholder partnerships 2024 in Bali International Convention Center. And this forum is expected to serve as a platform for exchanging ideas, learning, and also collaboration, where multi-stakeholders can unite in the global efforts to ensure adherence to development effectiveness principles in bringing out a transformative change. And Excellencies, ladies and gentlemen, moving on to the main agenda of the second parallel thematic session, with the theme once again unlocking growth, overcoming barriers, and optimizing investment returns through smart outbound-inbound strategies. We will start the panel moderated session discussion. And now let us welcome and give the floor to our moderator for this panel, Ms. Heatherlyn Taylor-Strauss, Economic Affairs Officer, UNESCAP. Please come up to the stage.
Thank you very much, and good morning to everyone. Welcome to our session on unlocking growth and overcoming barriers and optimizing investment returns through smart inbound and outbound strategies. I'd like to invite our esteemed speakers to take the stage. Mr. Amadou Wada, Senior Director and Head of Portfolio Monitoring and Optimization of the Africa Finance Corporation. Mr. Jalil Rashid, Managing Director of the Tony Blair Institute for Global Change. Mr. David Sahin, Managing Director and Senior Partner of the Boston Consulting Group. Mr. Cahayo Purnomo, Director of Investment Promotion, Ministry of Investment of Indonesia, or BKPM. And Mr. Adi Haryono, Treasurer of the Indonesia Coffee Board and Commissioner of PT Capital API Global. Please join me in welcoming our distinguished panel. Before we get started today, I'd like to just share some brief opening remarks to give a bit of a context into what we'll be discussing today. In recent years, we've witnessed a significant shift in global investment patterns. In 2022, developing economies continue to play a significant role in global outward foreign direct investment flows, or OFDI flows. They accounted for roughly 34% of all OFDI flows in the globe. The sustained and high level of OFDI coming from developing countries reflects the growing capabilities and ambitions of firms from middle and upper income countries, even in the face of global economic challenges and uncertainties. OFDI allows companies from developing countries to access new markets, resources, and capabilities. It can also support the development of the home economies of these countries. It can do so by leading to increased financial earnings, higher export earnings, improved know-how and innovation, industrial upgrading, as well as productivity growth. And coming from the United Nations, we would also like to emphasize that these effects can also contribute significantly to achieving the Sustainable Development Goals. However, with this being said, the growth of OFDI can raise important questions about balancing OFDI with IFDI, or inward investment, managing risks, and ensuring development benefits. We see imbalances in global investment flows, with developing countries only receiving about 40% of all global FDI inflows still. And this is despite their growing role as outward investors. Even within developing regions themselves, there is still a heavy concentration of FDI in only a few countries. Against this backdrop, today's session is going to be exploring several overarching questions. What are some of the best practices and lessons that we can take away to create a diverse and resilient outbound investment portfolio amidst global volatility? How can developing countries develop and implement smart OFDI strategies while attracting inward FDI? What enabling environments, investment institutions included, and policies are needed to optimize investment flows and enable them to thrive? And how can the risks be mitigated and returns maximized for both inbound and outbound FDI? Through working through some of these overarching questions, today's discussion aims to facilitate a dialogue that can lead to a two-way reformation. On the one side, it aims to create a higher tendency for investors to channel investment into developing and least developing countries. On the other side, to create a better enabling ecosystem and environment for those investors to invest in developing and least developed countries. We have an excellent panel today to address these critical overarching questions. They represent perspectives from development finance, policy advocacy and policy advisory, management consulting, government, and the private sector, otherwise investors. The diverse experiences of all of our panelists will provide valuable insights into how countries can navigate the complexities of outbound and inbound investment strategies. And as we move forward discussing these issues, it's important to remember the global context for investment is rapidly evolving. Factors such as digitalization, climate change, and shifting geopolitical dynamics are creating new challenges and opportunities. Our goal today is to explore how developing countries can position themselves to unlock new sources of growth and development through smart investment strategies. With that being said, let's get our discussion started. But before we do, just a few housekeeping matters for the panelists. Each of you has the clocks up here in front of us. You will have about 12 minutes to answer the questions that I'll be posing to you. At the 11-minute mark, I will step in and just let you know that you have 1 minute left to discuss. I know this will disrupt your flow, and I apologize in advance for that. I'm doing that just to make sure each of you has enough time to make your points, but also to ensure that we have enough time for the audience to ask their burning question at the end of our discussion. So with that, let's get started. Amadou, I'd like to ask you first to kick off the discussion. Drawing on your experience at AFC, could you discuss the optimal balance of government involvement in outbound investment management and the allocation of responsibilities and risks between governments and non-government entities?
Thank you very much, Heather, and good morning. First, let me begin by thanking the government of Indonesia for organizing this high-level forum for exchange of ideas and also for inviting Africa Finance Corporation to share its perspective with regard to infrastructure financing on the African continent. Thanks again, Heather, for setting the stage. But if I may add some few data points before I proceed with answering your question. The world is facing many challenges as of today, and these range from climate crisis, food security, as well as energy security. I'm saying this because I want to set the context. This forum is happening right after the Indonesia-Africa engagement sessions yesterday. And I think it's important to try and dimension the investment opportunities that the African continent presents to potential investors in the global south. I mentioned the challenges that the world is facing. If we take food security, for example, Africa has over 60% of the arable land in the world, but only 5% of this land is currently being cultivated. What does this mean? It means that there's huge potentials to invest in food production on the African continent. And with that, the global food crisis could be ameliorated. If you look at climate, most of the minerals and metals that are needed for the global energy transition are located in Africa. These minerals have to be mined, they have to be processed, and they have to be transported. Again, these are huge investment opportunities that are in the continent. Now, we are also seeing a world that is getting more and more polarized. We are seeing that investment flows are being largely dictated by geopolitical considerations as opposed to based on their actual merits from a returns perspective. And for us in Africa, the key message is we need to be engaging with economies who are like-minded in terms of their economic development approaches. So with this as background, let me go into the question that Heather has just asked. Government has a huge role to play in facilitating investments. But I think the key issue is that involvement should not stifle private sector participation in terms of investment. So the key message for me is that there has to be the right balance between government intervention as well as autonomy for the private sector to thrive. AFC, the Africa Finance Corporation, which is the institution that I work for, is a public-private partnership venture. For me, is a true testament of having the right balance between the public sector and the private sector. I'll come back to the AFC example in due course. Okay. So what should be the role of government? The role of government in helping to attract investment flows is to provide the enabling environment, and through several means. The first is to make sure that there is provide strategic guidance. Strategic guidance would be in the form of ensuring that there are clear, coherent, and transparent policies, regulations, and strategies that would govern investments. The second area where government can support investments is through targeted support. This can come in the form of tax breaks or through provided market intelligence to private sector parties. The other key area which is very, very important for private investors is risk mitigation. Here, government's key role should be that of providing, if you look at outward foreign direct investments, creating the necessary bilateral investment treaties that would provide some sort of a protection for private investors. It can also take the form of providing political risk insurance and guarantees to mitigate risks, particularly political risks for private investors. The other area where government could be very, very instrumental is ensuring that it provides the necessary capacity to its employees so that they are more understanding of the needs of the private sector in terms of investments. And lastly, say with governments, I would say would be to provide enabling infrastructure so that businesses can undertake their operations without much hindrance. This infrastructure could be in the form of roads, ports, airports, etc., that would facilitate business. So I think if governments are able to put this together, and that's the experience we have on the African continent, it really does help to attract significant amount of investment flows. The private sector, on the other side, their key role should be to be able to undertake thorough due diligence as well as risk assessment in determining investment decisions, but also making sure that such investments are in line with national development programs and goals. Now, I mentioned that AFC is a classic case of getting the balance right between the public and the private sector. What do I mean by that? AFC was set up 16 years ago by a treaty among African sovereign states and the private sector. The governments own 42% of the company and the private sector owns 58%. So it's operating as a public-private partnership. But it is a congruence of, we all know government's interest is more around development impact, but private investors, their main objective is returns. So being able to have that blend of development finance, development objectives, as well as attractive returns for investors was the key to making AFC a success. And it was done through mapping out infrastructure sectors that can provide that high development impact, but also attractive returns on investment. And the company has grown. It has increased in balance sheet 12-fold over the past 16 years. It is the second highest internationally rated agency on the African continent, which allows it to be able to attract relatively cheap financing from the capital markets and deploy that on the continent for developing infrastructure. The other key aspect it does, it also helps to de-risk investments on the African continent, and in so doing, be able to attract investments from pension funds, etc., who in the past have likely been making their investments in the northern part of the hemisphere, where they were getting returns in the mid to high single digits. But with the risking of infrastructure investments within the continent, some of these pension funds are able to invest in infrastructure within developing countries and are able to reap mid to high teens in terms of returns on such investments. So these are, I think, important lessons that we are experiencing on the African continent, and we really wish to share with colleagues in the Global South. Being conscious of time, so I'll just try and accelerate a bit. We have noticed that, or maybe I should put it this way, we acknowledge the rapid industrialization that is taking place in Indonesia, and we also recognize Indonesia, together with other donors, are providing some significant amount of aid to the African continent. But our experience on the continent is that, yes, aid is important, but the amount of investment that is needed to move the dial in terms of infrastructure development and industrialization on the continent is quite significant. So we are of the view that investment rather than aid is more critical for developing economies. And we have advocated to other development partners that if a small portion of the aid that is being given to these governments is repurposed to provide some form of guarantees to the private sector to mitigate against losses, etc. Such aid could attract multiple, twice or three times the level of private sector funding. So you can utilize part of that aid to crowd in private sector funding in multiples of the aid that would have been utilized. So we would urge countries that are partnering on the African continent, particularly Indonesia and other countries, to have a rethink in terms of their aid programs to try and include some components that would help to catalyze private sector investment into the continent. So I'll stop here, conscious of time, and I'll be happy to take questions when we get there.
Thank you, Amadou. I was just about to ask you to wrap up.
Sure.
I think you made some excellent points there. I particularly, coming from the perspective that we're working in SCAP and advising some of the governments in Asia and the Pacific on developing FDI attraction strategies, I really like the emphasis on, transparency, and I especially think that things like, the WTO's new investment facilitation for development framework can really aid, especially as more governments aim to sign up for that and implement that. And I can't emphasize enough the point that you mentioned about targeted support to investors. Not all across the board tax incentives and breaks. They're not the things that are going to achieve development, but targeted support that's really aimed at investors to really boost those industries that you're aiming to develop. The other point that I'd like to just emphasize that you made that I thought was intriguing was this notion of investment is more important than aid. Investment can contribute to more development outcomes. And on that note, just to kind of bring the audience up to speed on that, there is actual evidence out there that investment, foreign direct investment in particular, has been the largest source of development finance for the past 3 decades. So we need to be focusing more on how we can direct that into achieving the development outcomes developing and least developed countries are looking for. Thank you, Amadou. So Jalil, moving on to you, based on your work at the Tony Blair Institute, could you elaborate more on the key sectors and aspects that should be prioritized in reforming national fiscal and structural policies to create a better enabling environment for investment?
Okay. Yeah, it's a big topic. 12 minutes, I'll break it down. So I'll probably go through, for one is, what are sort of investments that governments really, really need to put a lot of political will and power behind. Second, I'll talk about some of the challenges when we go into what we call developing countries and the common mistakes that we have seen either state-owned enterprise or governments doing. Third, I'll talk about the difference between inbound and outbound, because governments always feel that there's a mismatch. And then lastly, on having the right stakeholders. Now, the first one, what investment? The job that I do, we advise political leadership, the presidents and prime ministers of various countries around the world on what they should prioritize on. And this question comes up all the time. And we always tell them, focus on infrastructure. And I'll break that into two. One is the hardware, things that you see, and one is the software, things you don't see. And it's equally important that they need to go in tandem. So things that you see, these are things like energy, water, it could be transportation, it could be having ports, roads, airports. Then importantly, in this day and age, digital network, having that connectivity and being able to be connected. And why is this important? Because if you imagine a house, the infrastructure is your foundation. Your FDI is everything that comes on top of that. So once you get the right infrastructure, the FDI will come in because you've got the hard infrastructure and you've got the right environment as well in terms of regulations that will come in. Now, just to give an example, if there was a company that wanted to invest in a country and they wanted to set up a factory, what are the factors that they would be looking at? They'll be looking at how fast can I produce the goods in the most cost-efficient way, And how can I get it out from an export perspective, which means that I need road access, rail access, airport, and I need the ability to hire good people. And then I also would need to bring skilled expertise that may not be available there, which means that the government needs to be open to opening this out to other people. Then so if you look at, for example, investing in water and energy, that's your raw component of what you need. You need that to keep things going. Transportation is that experience that you get when you arrive in a country and you see that infrastructure is in place, and then the connectivity is the digital part. Now the software, the unseen things are things like regulatory aspects. Do you have, to what Amadou mentioned, do you have the right free trade agreement in order to kind of do business? Do you have the right incentives to attract those companies? And do you have the right tax regime as well to invest? I always say I give an example in my work that I visited the country about a year ago, and this was a mineral-rich country. And the first thing the president told us was that he wanted FDI of about $30-40 billion from the mineral industry. But the first thing on my mind was that the journey that got us to the office, the roads were not great. And when we arrived, we were actually assigned about 10 to 20 security officers. So I said, there is a thinking that you need to go back to foundation, to focus on the right infrastructure in order to get the investors in, and not to get the investors in and then worry about the infrastructure. So that's one. Where do you need to focus? Infra, because you get that right, everything then happens by itself. Now, on terms of inward between and outward, the outward investments typically begins, and is in a lot of countries, it is led by state-owned enterprises that have done very well domestically, and domestically is getting a bit too small, and then they go out. One of the common things that we have seen is that when they go out to different countries, there may be an inability to understand how that other country works, because you've been so dominant in your own country. There's a certain way of working, and there's a need to kind of understand how things operate there. You need to navigate the system, and you need to appreciate the culture. There's also a need to focus on capacity building. Like pretty much every inbound investment that comes in, one of the things that governments will always say is that, you need to make sure that my people are moving up from here to here, and that's a very valid ask. So when companies go out, they need to put themselves in that position and be able to also elevate that, and that is how successful outbound investments have been. They've been really very good at going out there, building it, hiring people, moving up the value chain, and just creating that nice environment that attracts more investments to come in. Then we talk about the third part, about investing in probably emerging markets and developing markets, because these are the countries that really is the one that needs a lot of the investment. I'm not saying that developed markets don't need it, but they probably need it a lot more, and it is going to the more basic kind of investments. It is a high return environment, but it is also high risk. So you do need to understand the aim of the country and what they're trying to achieve there. And also that maybe in some countries, the capacity to deliver on certain things may be lower. So you need to kind of, work closer with the governments in order to get certain things done. And there's obviously the cost of delivering that is also higher, right? Because things may not necessarily be a lot more efficient, so your margins and your returns will be a bit more lower. But I always say that investments need to be seen as an investment for infrastructure needs to be seen as an investment for tomorrow. You don't build a new infrastructure every year. Once you've built something, it's going to be there for a very, very long time. So if you were to do the math on it, there's a lot of benefits that would come through from that. And then the last part is having the right stakeholders in the room. This is also a common mistake that we often find, is that the right stakeholders are never in the room talking to each other. An example again would be that if for example, a country says tourism is a big aspect of their strategy, we often find that that is confined to the responsibilities of just the tourism minister. And it can't be that. You need to have the transport authorities there. You need to have the immigration authorities there. What does it really take to create a tourism hub, right? Let's take Bali, where we are right now. The thinking was at that point in time that we needed to make sure that we have nice hotels, we have experience for every kind of traveler, and we need to make the immigration a lot more efficient. If you have visas on every country, that becomes difficult. People don't want to go. We need to have direct air connectivity. So this involves everyone from the airline, Transport Ministry, Civil Aviation Authority, Home Affairs, everyone to be in the same room talking to each other. And when you've created that structure where there is all the right stakeholders together, you often get a lot more powerful outcomes. Then as an extension to that is making sure that this comes from the ambit and authority of the political leadership, right? This needs to come from the person right at the top saying, this is a priority. I want all of you to be in the room. Find a way. Don't come out of the room until you find a solution. And that is how some of the great success of countries that have attracted FDI have worked, because there is that absolute, almost obsession-like mentality into how they put things together. And the third one is on partnerships. Oftentimes, government also feel that the burden is solely on them. I say that, there is a place for governments to be in business at a certain point in time, but when you reach a certain stage of development, you should no longer be in business. Your job is to facilitate the business, and hence why private-public partnership is very important. You can always craft something where if you say for sovereign purposes, I can't give you ownership, it's fine. We can do an arrangement where we let the private sector kind of fund it. We give a concession, and it's a win-win situation. We've got the infrastructure, it's funded, it's done. So thinking a bit more beyond the fact that I need to fund this from my own balance sheet needs to also be thought about. To summarize, what investments? Infrastructure, always. And I feel that is where government's role is always. And between thinking about inbound and outbound, you really need to be very clear about why you're going outbound. Again, to illustrate a short story that we did work in a country and who had a very, very successful telecommunications company that was very efficient, and they were the industry benchmark for a lot of countries. And when we asked the person in charge what's next, and he said that we're going to go to 5 of our neighboring countries and do the same thing. And we're like, why? He said, we want to grow the footprint. And for me, that was probably the wrong idea of why they wanted to go, because there was a thinking that we've been successful here, we will replicate the success there. And true enough, they did go, and it ended quite badly. And then lastly is just having the right stakeholders in the room in order to get this done. Yeah.
Thanks, Jalila. I would also add on to what you said. I think one point I took away was the importance of a whole of government approach to it. That it's not just one ministry to determine something, but you really need to have, as you said, the right stakeholders in the room, not just one ministry. I think, pertinent right now, coming up in November, we've got COP coming, and soon countries are going to be announcing their plans for investing in their NDCs and their climate commitments. But, oftentimes it's only one ministry that's involved in this conversation, and not necessarily also the ministries that are responsible for attracting investment. For instance, we have one up here with us, BKPM. but I'm not coming to you yet, BKBM. I'm just going to keep moving along on our panel here. Davids, I'd like to turn to you now, and from your perspective at BCG, could you share some insights on current and future trends in outbound and inbound investment, including prevalent sectors, and how multi-stakeholder partnerships can be optimized to support countries in navigating these trends?
Sure. Yeah. I'm not sure if my slide is gonna be shown, but maybe I'll start, right? So, if we look at into the last 20 years, yeah, the world economy 20 years ago was roughly about $44 trillion. Is it working? Is my voice audible? Okay, good. Yeah. So I mean, I like to look at things into a bigger picture. So if we look at the last 20 years, we can clearly see on what is the role of investment in the world's economy, right? 20 years ago, the world GDP was roughly about 44 trillion US dollars, and investment accounted for about 25% of that world GDP. Yeah. And then if we look at today, the world economy is about 104 trillion US dollar, and investment accounted for a bigger proportion compared to 20 years ago at 27%. But then if we look deeper, if we look into the FDI, majority of the people maybe will not realize this, but FDI today, as a proportion of total investment in the world, is actually much, much smaller than 20 years ago, right? It was at 10% of total investment 20 years ago. Today, only 6%. You can actually see on the left-hand chart, right? So I think that this clearly is something that together, I think, as the nations and the multilateral organizations also, we need to figure out on how we can reverse the trends, right? Because it's basically saying that most countries are investing in their own country, right? Because the FDI is actually becoming a smaller proportion of the total world investment, yeah? And the second point I wanted to make is, out of the 6% of total investment, which is the FDI, right? How about the outbound and how about the outflow and the inflow, right? What we also notice, the developing economies now actually accounting for a bigger proportion on outflow FDI. Of course, it's mainly driven by China. You can see on the right-hand chart, right? China now accounted for about 19% of outbound or outflow FDI, yeah. Southeast Asia also doing relatively well. I think it has tripled the outflow FDI. If we look at inflow, the good news is majority of the FDI 20 years ago went to developed markets, now already shifted. So although it's becoming smaller as proportion of world economy, but at least the proportion that goes to developing economies are actually higher now. And again, the major beneficiary are countries such as, or regions such as China, of course, Southeast Asia, and Africa also, right? So that is some of the trends that we observe at the 20 years horizon, right? And if we move to the next page, right? Now, if you look at the sectors, right? The sectors are also very interesting, yeah. 20 years ago, the main FDIs goes to extractive industries, automotive, energy and gas supply. Right? And you can see, of course, energy and gas supply remains the highest sector, I think, in FDI today. But then the other two actually who go up quite a bit are electronics and electrical equipment, as well as information and communication. Yeah. So this is actually a global statistic. Yeah. So this clearly shows the shift or evolution, what sectors are now gaining and attracting more FDIs at the moment, right? And I think this is not surprising, right? Of course, with all the just energy transitions, the need for energy, energy will remain to be very, very dominant, right? Of course, electronics, electrical equipment, we all know about how the chips, the semiconductors, are all actually very important as part of our digital connectivity and digital economy, right? And of course, information and communication, yeah. So I think these are some of the some of the key sectors that we think worth looking into. Different countries, of course, will have different priorities, yeah. And I always believe that, especially if you are still developing, of course, I agree with Jill that investing in infrastructure, energy, healthcare, normally are the, I guess, the main hygiene sectors that we always need to develop, right? But beyond that, I think normally as the country want to move up and escape the middle income trap, then they need to look at into like, what are some of the sectors that can provide jobs that give you higher income level, right? And for some countries also, they need to look at what are their strengths, right? I think Jill mentioned about tourism, for example. Indonesia has a lot of raw potential when it comes to tourism, right? But we are nowhere near some of our neighboring country like Thailand, for example. Right? Another example from our country, Indonesia, is about, for example, nickel and EV, right? This is where you can actually see, I think, the power of having almost obsession, I guess, across the different level of the governments as well as the private sector really drive on significant progress in the last 3 years, right, when it comes to EV. So I think those are on the trends as well as on the sectors. Yeah. Now, if we also look at how the different parties need to actually work together, right? I think the theme of our discussion today is about multi-stakeholder partnership, right? Maybe if we go deeper into the EV example I mentioned about, right, on how, you know, from the government we made it a point, this is a priority, it's in the national plan of our Ministry of Industry, it's in the RPJMN, which is the medium term of plan of the Indonesia government, right? We issue multiple presidential decrees to actually make sure that this going. So clearly from the government, a lot of support, including the incentive we give, right? No luxury tax for the EV cars and many other things, right? But we also look at in terms of how the other sectors are being encouraged, right, to push themselves. Of course, the state-owned enterprise are relatively straightforward. They are almost the extension of the government, right, on how all the senior leaders are encouraged to use EV, right? But also they need to provide the infrastructure, right? Like how the PLN, the state-owned utility company, need to provide their charging infrastructure, right? And the financial institutions, both local as well as the foreign financial institutions, have been supporting the build of EV battery, the build of EV factories in Indonesia. So clearly it's one of the examples where if you have the original strength, which is your nickel reserve, and you have clear determination, this is an important sector for you, then you actually got everyone to work together. Yeah. Another sector that I see our neighbor country is very successful is Malaysia on data center, right? I think that's in line with the third category, information and communication. If we look at like 5 years ago, I think Singapore was clearly the largest data center in Southeast Asia. But of course, Singapore has a lot of physical constraint, right? Renewable power constraint, they have water constraint, right? Then many countries such as Malaysia, Indonesia are trying to put more attention to this particular sector, right? But I would probably say Malaysia is gaining the upper hand for now. I think partly because they really make sure that all the critical enablers are there, right? So it's not only about the data center incentive, but also they think about how the renewable energy, how they allow the data centers to actually procure the renewable energy directly using future power purchase agreement, right? Some of those things, I think some of the countries need to learn, right? And the reason I'm excited about data center, because data center is only the infrastructure, yeah, but the economic multiplier come on top, right? Because on top of data center, you have the cloud, you have the AI services, right? And how do we make sure that we create a regulation that is attracting not only for the physical infrastructure side of investment, but it's actually all the middle layers and the surface layers as well, because that's where the value are gonna be created, yeah. And I think that's something that I see my country, at least Indonesia, has a big homework to work on this, right? And that's something that if we do it right, is gonna help us to prepare towards our high-income country target that we have by 2045. Yeah. So maybe that's some of the sharing that I would like to share. Yeah.
Thank you, David. You know, I think there are a couple of points that I really picked up on from what you were discussing. One is obviously the shifts in sector priorities, but we still have generally the same type of sectors. It's just the priorities have shifted, which is very much aligned with, as you said, energy transitions, the push towards digitalization of all of our economies. One interesting thing, I think, especially aligned with the work that we're doing over at SCAP, we've been talking to several investors that are based in ASEAN, but also global investors that are significantly struggling, not just digital companies that are investing in data centers, but manufacturing companies that have made commitments to become net zero. And one of the challenges they're facing in several ASEAN countries is the fact that many ASEAN countries can't provide reliable sources of renewable energy. Where Malaysia has done a great job providing data centers with sources for renewable energy, there's still a long way to go, especially for manufacturing companies, getting their access to reliable renewable energy to meet net zero commitments. And several have also expressed to several ASEAN governments, we're ready to pull our investments if you can't give us this access. So I think that is something that really needs to be worked out going forward. So I like that you brought this up as Malaysia, a good example that has done this for data centers. One thing I also think that is really interesting that you brought up was, it's important to figure out what your country is good at, your niche sector. It's not that you should just be targeting maybe data centers. Do you have all of the resources or the infrastructure, Jalil, as you mentioned, to actually be targeting data centers? And it's not just data centers, it's every type of broad sector, but also those niche subsectors. Do you have that hard infrastructure, that soft infrastructure to get the investors in your economy? Thank you very much.
Thank you.
I'd like to move on now. Jahayo, I'm going to turn to you now. Can you, drawing on your experience at BKPM, could you discuss some of the main political and regulatory challenges that have hindered investment in the Global South, but also supported investment in the Global South? For instance, touching on things like infrastructure gaps, which we've also heard from other panelists, but as well as the responsibilities and risks between government and non-government entities.
Right. Thank you, Heather. It's good to meet you again. I remember last year we met at the ASEAN Investment Forum, and it was organized, I think, on weekend in Jakarta, I think 1st September, and at the Sultan Hotel. It was, in fact, our first, meeting during the weekend. Normally, we never organize any business or investment forum, during weekend. But that was, a fruitful one, and we were quite happy with all the outcomes and all the response from the audience. Of course, I'd like to take this opportunity to also extend our appreciation to Bappenas, our host, for organizing this event and also for inviting us. And I know a number of our senior officials actually coming from Bappenas, so we have good connections with them. And this forum is also part of global discussion, wider discussion on how investment can play a part, in national development goals for each and every developing countries, including the Global South. Let me begin with, of course, a note from the World Investment Report. Earlier, this has been shared by David. As we are aware, the global FDI declined by 2%, to $1.3 trillion last year. And we see many regions all over the world, North America, East Asia, and many others, were experiencing, some slowdown, while Southeast ASEAN or ASEAN, countries in general, in fact, bucked the trend with 1.3% increase, reaching to close to $226 billion. Of course, as you live in Bangkok, right? So again, being part of the ASEAN, you see, we see some challenges in Myanmar. We see some government shakedown in Thailand, and in some of our neighboring countries. In general, Indonesia, again, we successfully conducted the election, and it was very in terms of the turnout, many people cast the vote, and next month we will have new president. Yeah, the new president-elect now. You see his picture everywhere around this convention. Again, we will be having new president by October 20th, and again, in terms of the political and economic, situation, you don't see, big challenge, not only in Indonesia but also in the region. Of course, there are, few things, but, I believe that we are on track, to maintain ASEAN as a free and open investment destination, including by making ASEAN, when it comes to, take the region to the next level. And on that note, again, Indonesia being the founder and the biggest economy in ASEAN, with roughly 41% of the total population and also 36% of the economy in the region. And I'm also pleased to share our investment realization data, which is, basically to complement the existing one. Last year, our investment realization surpassed our target of close to, 96 billion US dollar. And I'm referring to investment realization, not investment commitments nor approvals. Of course, some countries, they have different measurement, but what we always come up with is all about investment realization. And this number does not cover the investment in the financial sector nor in the upstream oil and gas. So if you add with this, I believe the number is even higher. This year, our target is to, have of roughly 100 billion of investment realization. By June last year, we were slightly, exceeding our target. So we believe we are on track. And of course, when we take a look at this, this is in line with the previous 5 years data, where we were able, to basically double, the investment realization from 51 billion US dollar in 2018 to again close to 96 billion US dollar last year. And the good thing is, and this is also the beauty of our data, when we take a look at closer manufacturing sector, the increase is very much higher, by 2.7 times, So from the 40.3 billion US dollar, with leading sectors such as metal, food, chemical, pharmaceutical, and automotive industry. I think Pak David mentioned earlier on a number of key sectors in Indonesia. When we wanted to come out with building or developing the whole EV ecosystem in Indonesia, our focus is not only on the mining sector or refining or smelting, but also on the battery materials, precursor cathode, all the way into battery cell, battery pack, even battery charging and recycling. I'm happy yesterday, the Secretary General of UNCTAD, Ms. Rebecca Greenspan, in 2 occasions, I witnessed in the morning and also in the afternoon, where he take Indonesia as perhaps one of the success story when it comes to value adding creation by developing downstream investment in Indonesia. And again, being part of the global South, it's always important for us to sharing this and to be able to share each other. And I'm also happy, as some of you are aware, number of Indonesian companies are also making some investment overseas, including in Africa. And I think Pak Adi later on will be speaking about that, from his experience. But I would also like to comment and add, Jalil's earlier intervention on the role of the infrastructure. In Indonesia, if we take a look at, of course, the whole, again, we have the so-called PPP scheme and so on and so forth, but we also have one success story where one, conglomerate is building, an airport and also a toll road, So this is also something new. And, of course, the main purpose is to support, their main business activities. But, of course, this can also have a wider impact to the region. If we take a look at the current government of our President Jokowi, for instance, in the past 10 years, the fast infrastructure all over Indonesia has been built and developed, not only on the toll roads or dams or ports, airports, seaports, and things like that, but also on the soft infra, software infra, as mentioned earlier by Jalil. So the ICT connectivity and so on and so forth. But of course, we understand. I think last year I went to Palopo, for instance, one small city, in South Sulawesi. Right after COVID, there was only one single flight because the demand is slowing down. So this is also the thing that we have to face. Of course, the operators will always serve the so-called traffic, depending on the demand and so on and so forth. So with this, what I also want to reiterate is how the investment, how the FDI, play a role. And of course, talking about the bottlenecks, and things like that, we also see, people, the business people in particular, are always, asking the government to simplify, to expedite all the investment approval process, and it covers the whole investment, not only, let's say, in one particular sector, but the whole sector. And this is why the government has introduced a number of reform. The most recent reform, as some of you are aware, is by, introducing the so-called omnibus law on job creation. The most comprehensive, reform that we have undertaken in the last 40, 50 years, according to World Bank, Again, the main idea is basically to streamline all the sectoral laws, to harmonize between central government and local government, how to, come up with a single platform that is used by all the stakeholders, fully connected, where the business people can really, access all the investment licensing process, So again, with this, of course, the focus is not only to serve so-called foreign investment, but also domestic investment, including our SMEs. So with this, I'm happy to share that, we always, wanted to basically improve, the current, online single investment platform by always, connecting all the platform into each and every ministries, because, we no longer, issue the licenses through the so-called face-to-face meeting or, physical form, everything is done through the online form. So again, it's good to share Indonesia experience, and we also wanted to see, and I think Amadou earlier also mentioned a number of potential, throughout ASEAN, African countries, and again, our minister yesterday, I witnessed his speech where he also mentioned, total Indonesian investment throughout Africa, has been quite big. I think over the past 5 years, roughly was about 1.6 billion US dollar. And again, through this meeting, we hope we can do more. We'll be able to basically strengthen the relationship and take it to the next level. Thank you.
Thank you so much. I have to say I was very excited to see you on this session. At SCAP, when on our FDI work, we largely work with the investment promotion agencies, so like BKPM, and I always find it a pity if we're on a session talking about FDI and there is no investment promotion agency or Ministry of Investment on that session. So very happy to see you here. I also very much enjoyed the overview of what's happening in Indonesia, especially emphasizing the role that Indonesia has done in terms of value-added creation through specific sectors and what that can be as an example for other developing countries, especially in the African context, especially when we're looking at the minerals and minerals extraction. And finally, just to maybe point out, the investor registration platform that BKPM has created is one of the best examples in Asia, but also across the globe. And if you haven't taken a look at it, I would really recommend that you do. It was actually just emphasized in a WIPA meeting recently as being one of the best examples out there for ease of registration for businesses. So moving on, Adi, last but definitely not least, from your perspective at PT Capital AP Global, could you share some insights on what an enabling environment for the private sector looks like to encourage investment? And perhaps also share some examples of some good inbound, outbound strategies for coffee-producing countries to attract investment, but also to encourage it to move outwards.
Okay. Thanks for the opportunity, gentlemen, ladies. I'm currently sitting at Capital AP Global as the chairman of the company, and also sitting at the Indonesia Coffee Board as the treasurer. And I have the chairman of the Indonesian Coffee Board together with us today. Actually, coffee is actually the one that is driving the economy. Actually, without coffee, very hard to think and comes with the new technology or the new theories or policies. So everybody knows actually that Indonesia is one of the producing countries, the largest producing. We are number 3 in the Robusta for production. Number 1 is Vietnam, number 2 is Brazil. But all over the world, everybody knows Brazil because they do more on the Arabica side. Yes. So if we see a lot of investments actually goes to Brazil and Vietnam, but not into Indonesia. So we see what's actually happening in the past 5 years. So the productions have increased a lot in Brazil. They have developed new technologies that they grow more coffee. And Vietnam has been known for being productive with a smaller piece of land. Vietnam has received a lot of investments in year 2020. We see Nestle produces more solubles. They are the biggest in the country. They are also receiving investments from India. Yes, we see that Tata is growing quite big. Vietnam also receives investments from Louis Dreyfus, which is one of the largest trading company in coffee in the world. So we see different kinds of investments can be done in coffee. Everybody, if we see in the chart here, most of us thinks of us as a domestic, as a producing country. But our challenge is also how do we go abroad, outbound, for the investing and getting more revenues. This is how the value chain works. From the farmers, we go to the exporters, and then we go to get processed, and then we go to the distributors, and then we go through the channels, which is either coffee shops or the retailers. This is basically the players. How do we get into more investments into a country? Of course, Starbucks, everybody knows, invest heavily in a lot of countries through franchise, in the marketing, or through the farmers. So we see that Indonesia, if we compare to Vietnam and Brazil, Brazil has an excess capacity of coffee production. They have an excess about, I think, 30 million bags, which is half of their country's production. 30 million is a lot. Vietnam has an excess capacity about 20 million. They have a 30 million production. They have an excess of 20 million. On the other side, Indonesia has 10 million. We have an excess of 5 million. Yes, Indonesia has more lands. So we see, okay, there are rooms to grow for this economy to prosper. In the Indonesia Coffee Board, we are doing a lot of efforts in the past few years. We are trying to see if we can improve the productivity in the farmers by from 0.6 tons per hectare. We are trying to move it up into 2 tons per hectare, and then later on by replanting to achieve 5 tons per hectare. At this moment, Brazil has moved from 2,000 hectares per hectare, 2,000 trees per hectare of 3 tons per hectare. Now they are already achieving 8 tons in the same hectares. So by replanting from 2,000 trees to 4,000 trees, this is what I saw last year in 2023. So they have done good production, they improved the methods, and they replant more density and per hectare. So this is what we are introducing in the Indonesian Coffee Board to the farmers. We develop through communities, through several areas. Then we will be able to see that the farmers will be able to prosper. Because number one thing that we want to see is the farmers from the same plot of land will be able to generate more wealth. From 0.6 to 2 tons, they will be able to generate more money independent of the volatility of the price of the commodity. By having more products, they will be able to sell more. This indirectly will help to grow the economy better because it reduces the inequality in the wealth and revenue from the farmers to the exporters with the farm grade. They will have more profit in the business. And overall, with having the economic growth, prosperity, and inequality, then we will have the better GDP nationwide. This goes across the board in all agriculture products. So this is one area that we see that way with Indonesia Coffee Board can contribute to the improvement of the whole society. Number two is that Indonesia Coffee Board is also promoting the Indonesian coffee overseas. So we have documentary films which provide literacy about Indonesian coffee per regions. Then it gives better value for all the farmers. It gives more incentive for the traders or exporters to carry our coffee into the inventory all over the world. So we are building these demands through documentary films that can be later on provided to Netflix and other channels. Yes, we have an award on that one as well. The other thing that we are doing is we are promoting contract farming. I think in all regions, the best investments will be to see that if the farmers, which their assets, as land and laborers, to be able to generate more money. And for the companies, instead of investing in the lands, they will be investing in the equipments, providing financing, providing supports, which the farmers do not have. By combining all these assets and resources, then they will be able to generate more returns for each of their investments. So rather than each farmer have their own equipments, they can share this to an agriculture firm, or they can have the contract farmer to provide this on a collective basis. Yes, so sharing resources on these methods. Then we will be able to see as well, this is interesting, the banks do not provide financing to the farmers if they do not have off-takers. So by having this contract farming, we'll be able to solve the issue of the financeability of the farmers, but it also helps the bank to know more about the clienteles. They will have to do this through the collectors. So we will create a cooperation between the collectors, the banks, and the farmers. Then they will be able to have more business-like culture. Slowly, but they will develop more capability to thrive in the business. So farmers are not going to be only as farmers, but they will be able to upgrade as a small, medium enterprise, like small business proprietary. So this is what we are trying to develop in the next few years for the how to build the cooperation between the companies and the farmers. We have seen these models being also done in Vietnam and Brazil. I think Starbucks is doing most in Indonesia. We have seen the practice of Nestle and Nescafe building this in Vietnam as well. So more and more companies overseas are doing this in Indonesia as well. So it gives them the more access for exports. For our company, Kapal Api, we are mostly in coffee, but we do seaweed as an aquaculture. We grow seaweed, we process this to be kerajinan. We are doing the dairy, non-dairy as well. So most of the agriculture products, we have the same models by going through the channels of the value chain. In the end, when it comes to consumer goods, then we have to deal, like say, when we are entering the European markets or American markets, then we will see all the distribution channels, like in this plot. So what we are doing in general, when we are coming to overseas, we look for distributor partners, number one. Number two, we look for we look for suitable candidates that will work with us. We did an inbound outbound strategy in one country, in the Philippines. That was one time. They will help us to distribute our products. It's a fish company, canned fish company. We distribute through the channels, and then we will later on build a manufacturing facility for the coffee together as a joint venture. Vice versa, they will use our distribution channels in Indonesia to enter the Indonesian market, and then later on we will build the plant for the canned fish. Things doesn't work because of the new regulation coming out that only local companies will be able to go into the fisheries. Yeah. Another examples that we did in the past was we had a joint venture with a Japanese company that goes selling the beverages, goes into our channels, and then in return, we want to develop with them ready-to-drink coffee in overseas, which in their territory of markets. So we will do this kind of reverse cooperation. But if we look at the chart, usually when we go inbound or outbound, usually it will be the same level of company that will work together, number one. Number two, we will have a similar industry, then we will complement as a new product or as for expansion. Number three, if we go vertical, either goes through the distribution or we goes to the manufacturing. That goes, the one that goes together with us for coffee shops, for instance, will be actually doing the coffee shops or restaurant business who wants to expand into Indonesia and whether they want to expand into their own markets. So it will be like similar product or strategy on this one. Usually we work well together with the Indonesian embassy, with the BKPM office. When we go, we do the market research together on this. Who wants to enter Indonesia and who has been inquiring, then we will know that we are at the same level. Then we go to the attaché office for the trade. Then they will be able to provide us some information how to do this better. Yeah, this is how we have the multi-stake partnerships and stakeholder partnerships to develop the economy. Yeah, thank you.
Thank you so much, Appy. I really enjoyed how on the one side, through your experience at the coffee board, you shared really essentially what you are doing as a sector in terms of a sector analysis to attract more investment through making things like improving the capacity, agricultural capacity and land capacity of Indonesia to attract more investment into the coffee sector. But then on the opposite side, you shared just the firsthand experience of being a company that is doing both inbound and outbound investment and combining the two through things like distribution networks as well as joint ventures to get around some of the regulatory hurdles that are out there and really maximize what you can do to attract investment and also to invest abroad. Thank you. Thank you, first of all, to all of our panelists for your insightful remarks, but also for sticking to time. We've got now about 10 minutes for questions from the audience. If you have any questions, I would just suggest that you maybe raise your hand. Do we have someone here that could share a microphone? Yes, we've got someone with a microphone that will come to you if you have a question. We've got one right here.
Thank you very much, Madam Moderator, and the panelists. I just wanted to contribute something on the inbound strategies. I think, reading from Indonesia here, my experience, the customer-centric approach is very important. When you meet Indonesians, whether in the restaurant, whether in the hotel, whether here in the conference, the welcome remarks and the attitude is very warm. And you know, that is very important because it encourages people to come and trade and stay. So it is one of the strategies in the inbound model. And then the other one is attraction of talents. You attract talent and you stay with it. Now, how? Because you see, quality is very expensive, the truth be told. Because if you are going to attract qualitative people, you must stay with them and you must remunerate them well. But I just want to speak to the colleague who talked about coffee. I come from a country called Uganda in Africa, and Uganda is one of, I think, the greatest growers of coffee. And I cannot hide my excitement about this conversation. This year, we largely grow Arabica coffee, which is one of the best quality in the world, I think. And this year alone, we exported 5.9 million bags. And so I rise up to extend my Ugandan invitation to you, but also to show my excitement. So, Madam Moderator, I thank you very much for the opportunity. I just wanted to submit on those two lanes. I thank you very much.
Thank you very much. I think we just had some comments in there about the importance of customer-centric, but also more generally the customer service orientation, human resources as key for investment, as well as an invitation for API to talk more about Uganda and coffee production there. Are there any comments from the panelists on any of this before we move on?
Yes, sir. I think the Uganda is quite interesting. We have seen a lot of investment also coming to Uganda. I've seen there's two Brazilian, from Latin America. From Brazil, Tres Corações has invested in Uganda for doing the solubles as well. And I've seen a lot of Indonesian companies are also going to Uganda for buying the coffee. Yes, I think Uganda has one of the countries that has a steady increase in the productions. Together with India, together with India and Colombia, after they suffered the damage in the crops, they also increased a lot. I've seen, yes, Uganda and Angola as well in Africa. You're right. There is good opportunities in Africa as well for the coffee.
Well, at the Ministry of Investment Coordinating Board in Indonesia, this is also what we do to basically support, and assist Indonesian companies if they want to expand their business overseas. So we'll be happy to, encourage Indonesian companies to basically expand including to Africa and Uganda in particular, and also to basically, explore any available opportunities. And normally this is also the main topic of discussion whenever our leaders, our our ministers, meet in a number of occasions, because again, this is also an opportunity that is, for me, I find too good to miss. Thank you.
Okay, we've got about 5 minutes. Is there any other questions from the audience? I think he's coming to you. He sees you.
Thank you very much. Let me introduce myself first. My name is Mustaqim. I'm from the Ministry of National Development Planning. I want to ask regarding the CAFI, but it more specific to the infrastructure because in my directorate we have kind of research in terms of the infrastructure supporting to the CAFI sectors. We have discussion with the local government as well because in Indonesia, the local government is not have like the big budget. We have very limited, both in the national and also in the local government. But based on your experience or other speakers, the investment from the investors in coffee sectors, how can we have the investment directly to infrastructure? Because like for the accessibility or road or the port and also the airport, how can we get the investment not only from the tax for the local government or the CSR? How can we invest more in order to help the local government to make like the easier accessibility both in those two sectors, in road, in port, and also in airports? I think that's only my question. Thank you.
Thank you for that question. I think a number of panelists here could answer that. Anyone want to go first?
I'd like to respond briefly. This is something that needs, in-depth discussion to basically ensure, what is actually the main component or critical success factor for the government, for instance, before developing one particular infra to support, let's say, our coffee growers and farmers and so on and so forth. And again, Heather, I remember in the beginning you mentioned the importance of having whole of government approach. So this is also key. So I believe all the stakeholders need to sit and discuss, to basically support and assist by again clarifying what are the each and every role that can be played by each and every government institution, because we also have a story where to be honest, our president also complained in a number of occasions, for instance, where the Minister of Public Works were able to build the dams, but it has limited connection to the, let's say, paddy fields and so on and so forth. Again, this is very important for us to come up. Again, whole of government approach is key. Coordination is a must. And again, this is classical issue. To be honest, in Indonesia, when it comes to stronger coordination at the central level, at the lowest level, at the local level, and so on and so forth, is very important. And basically, whenever there is opportunity, of course there is a possibility. If we take a look at the mineral resources, for instance, it is even, last 2 weeks I went all the way into Halmahera, East Halmahera. 5 hours direct flight from Jakarta, but you have to cross the strait by ferry 1.5 hours, and then 5 hours drive to all the location. in the remote area. Of course, again, they also requested the same, support, from the government to basically build infrastructure, so on and so forth, But then again, the Ministry of Transport, for instance, has built one small airport. But right after COVID, no airline flies to that airport anymore because of the low demand. This is also another issue, So whenever we discuss this with our colleague, the Minister of Transport, again, having sufficient demand is, of course, a must, for any airport operator, and so on and so forth. So there are many things that needs to discuss, but basically, whenever there is an opportunity, of course, we always encourage all the stakeholders to come up with, common solution. Thank you.
Okay, if I can just chime in on this question. I think it's a very good question, and I think it's something that's experienced in almost all developing countries. There's never enough budget to service the infrastructure needs of the communities. And from our perspective, we try to say, how can you rationalize this limited resource that we have? And you try to dissect the needs into what is it that the private sector, who are more returns oriented, which of this infrastructure would fit a private sector model? And then you try and prioritize those and give it to the private sector. Then the resources that are within the disposal of government can be used to finance those other infrastructure that might not be very, very attractive in terms of providing returns. Yeah.
Thank you, and thank you to the audience for the questions. This wraps up our session. I'm just going to provide some key points that we talked about, just as a little summary. So first, I'd like to take Amadou's point at the very beginning. Investment is critical to development, not just aid. Second, there's the critical importance of creating enabling environments, both for inbound and outbound environments. This includes regulatory clarity, transparency, targeted support, infrastructure development, both the seen and unseen infrastructure development, as well as the importance of taking a whole-of-government approach. There's a need for sophisticated risk management strategies that leverage both public and private sector expertise. There's potential and a need to address infrastructure gaps. Again, as Jalil brought up, the seen and unseen infrastructure is critical to addressing in order to attract investment, but also when you're encouraging outbound investment. There's a significant importance towards building local capacity and to linking this to maximize both the benefits of inward and outward investment. And we should also take into consideration the evolving global context for investment, including factors like digitalization, the energy transition, and shifting geopolitical dynamics. As we move forward, it's clear that developing countries must take a strategic and nuanced approach to maximizing the benefits of both inbound and outbound investment flows. And this requires ongoing policy innovation, capacity building, and multi-stakeholder collaboration. By learning from each other's experiences and leveraging new partnerships and technologies, developing countries in the Global South can position themselves to unlock new sources of growth and development through smart investment strategies. Thank you all for your participation and your insights. I look forward to seeing how the insights that you have all shared with us today translate into action in the coming years. Thank you.
Thank you, moderator, and also all distinguished speakers. Once again, big round of applause, ladies and gentlemen, for the fruitful discussion and also sharing experiences and knowledge. Please rise and please make a group photo together. Yes, on the stage. Yes, the moderator can be in the center. Okay. Yes, everybody please look at the camera, please. 3, 2, 1. Smile. Okay, once again. 3, 2, 1. Okay, thank you so much. Thank you so much. Yes, moderator and also all speakers, please kindly return to your seat. Ladies and gentlemen, we have finally reached the end of the second session, parallel thematic session of high-level forum on multi-stakeholders partnerships 2024. Yes, on behalf of the committee, we would like to thank you for your attendance, ladies and gentlemen, and participating for this second session of the parallel thematic. And for your information for the next agenda of high-level forum on multi-stakeholder partnership 2024 at parallel thematic session 3 will be the G20 Bali Global Blended Finance Alliance, a breakthrough of multi-stakeholders financing for development, and will be held here at this Meda room at 1:30 p.m. Once again, at 1:30 p.m. Central Indonesia time. So we hope you can also join us for the next session, which is the third session for today. And now, ladies and gentlemen, you may enjoy the lunch they already provided for you and the foyer area. Once again, we will start at 1:30 p.m. at Central Indonesian time. Hope you can join on time, and we will start again for the third session after lunch. So now, ladies and gentlemen, please enjoy your lunch and have a good day. Thank you.